Joining us some more now is Howard Silverblatt from S&P Global. Howard, good to catch up with you again. What are your observations about what we're seeing on the equity market at the moment? Slipping again a little in the last session, but as we head towards the end of the year, obviously, still a very bullish market.
Oh, very bullish. I mean, this year is going, the goal is 30%, 28% year to date with dividends on there. After last year, which was also over 20%. So we've had a very good run. We've had 10 brand new highs over the last 24 sessions, which is the U.S. election. The negative is the breadth, which is widened out, is not widened out enough, and the strength is still not there. The Magnificent Seven still are contributing about 62% of the return since the election component. And that's including Nvidia, which actually is down a tick from that point. So it is very concerning on there, but money is flowing in, so there is buying coming in. And some of the money looks like it's coming from foreign markets. We have some indications, but we don't have all the data yet. But money is coming in quickly, and it's pushing stocks up. And again, we're doing pretty good here, especially since the election and year to date.
You mentioned the Mag 7. Of course, Tesla very much solidifying itself back in the Mag 7, not the least because of the outlook, I guess, given Elon Musk. He has the ear of the president, so that has been extremely beneficial.
Yeah, the stock closed at almost 401 today. It was 251 or 252 when the election closed. There's several items coming in here. Yes, he has a very close relationship with the president and has his ear. Also, some of the policies look like it'll favor the business on this side. Even if the $7,500 credit for electric cars done away, Tesla has the money. They can survive it. Others may not be able to, and if he wants to, he can pick them up. There's a lot of economics in there as well, but Tesla is not doing as well, and since the election, amazing. Again, 250 going up to a $400 stock in 24 sessions.
Howard, what are we seeing at a macro level at the moment? Of course, we're waiting on key inflation data ahead of the Fed Reserve decision next week. Yep. And I do note also we had some small business optimism reading there. That's actually lifted. What are you seeing there at the moment?
Yeah, the CPI and the PPI will be important, but the way the street's seeing it now, the Fed is going to cut the quarter of a point on the 17th and 18th when they meet. This is going to determine what's going to happen in the January meeting. Will there still be a need for it? Remember, we won't have any impact, a new president for the January time period, and there'll be no impact from there. So the data that's coming in now is look more towards what's going to happen in January. Again, those PPI, CPI, and you have another employment coming in also the end of this month is going to be key for that, whether or not they will cut again. As far as the small business, that was a surprise, but it shouldn't have been. We should have looked back. The last time when Trump came in 2016, it also took a jump. What's doing it here is the small business people, which account for about half the employment in the U.S., see things a bit more optimistically. They think that the government's going to have less regulation. They won't be on their back as much. Taxes may go down, but it definitely won't go up, and that the environment should be good. A lot of small businesses are U.S. domestic, and the dollar should help them in that case. So that increased significantly. And again, it was a surprise to a lot of people, but then when we look back at the data, we kind of shook our heads and said, we shouldn't have been, but we were.
Yeah, all right. Now, of course, market's very much looking forward to what President-elect Trump is going to put in place when he assumes office in mid-January. Tariffs, of course, front and centre of his policy set pieces there. Interesting to see what we've just is going on as far as steel is concerned, with President Biden blocking Nippon Steel's takeover bid. What was that expected?
not that he would move on it this quickly. Some of the thoughts were that he might push it through and let Trump do it, because Trump did say he was against it. The unions were against it at this point. So you have Biden, who is more known as more pro-Trump, pro-labor, and Trump, who carried a lot of the labor vote. So he has to start looking towards them. But it was a little surprised that it was done now. There's going to be an issue there because U.S. Steel needs cash, it needs liquidity, and somehow it's going to have to get that. If Nippon doesn't come in and do some efficiencies and add cash, someone else is going to have to. The U.S. government's not going to let it go down, so they may need U.S. tax credits, or they may need additional incentives to stay here. But someone's going to have to help them out at this point because survival is guaranteed. Problem is how they're going to do it if it's not a merger and inflow.
And Howard, it seems this time every year we turn to the US debt ceiling as that set to expire. Is there any particular concern there? I guess particularly ahead also of the inauguration of Donald Trump.
Actually, this one's a little bit different on it. Again, we get the debt suspension on January 1, which means the Treasury can't has to pay the bills out of a different account, the Treasury General account. That's going to add, the estimates are about $400 billion to the U.S. economy in Q1 by itself. So there's going to be a lot of liquidity coming into the market, which should push interest rates down in the short term and help the economy. It'll also give some cover for new President Trump and Congress to enact some bills that may not go over as well with the market. The additional liquidity will help things. It'll also probably impact the Fed, whether they think they need to cut more, because again, this is going to be liquidity coming in outside of the banking system the way it usually does. So this is a little bit different at this point. They'll have to figure out the budget at some point, and there's a good chance they may not do it till the end of Q2 or Q3. Congress can do a Band-Aid, and they are going for recess in August of 2025. So it has to be done by then.